Afternoon, everyone. It's Jim here, and I'm joined by Graham again for our 5th live revision session for AQA A-Level Business. And today it's Unit 3.5. We're nothing if not predictable, which means it's finance. Graham, what kind of session have we got lined up today?
Hello, everyone. First of all, and are you okay, Jim?
Are you
okay?
Mate, yeah.
Good stuff. Good stuff. Well, as usual, we've got the regular MCQs. We've got some calculation questions. We've got a definition spinner. You name it, we've got it. As always, we would love it if you interact with us. Type your answers into the chat window, and we will, no doubt, Jim will select some to show on screen.
Yeah, absolutely.
So please get involved. Yeah, and if you've got any queries as well, anything you want to clarify, please type in the chat window. We will certainly do our best to answer it. But before we start, we're going to go to our activity called The Big Reveal. Now, the big reveal is, as the name suggests, is where we reveal 5 clues, and hopefully you can guess the name of the business. Now, for 2 weeks running, we have beat the chat window, i.e. no one has got it right. So what we've done is we have, I think, have we made it slightly easier today, Jim?
Well,
who knows?
You thought we had. I don't think we have. I think it's really tough because I don't think our live audience know many firms of lawyers. So we'll see, won't we?
Okay. So let's have a look at clue number 1. So clue number 1 is, it was founded in 1904 as Waite, Rose and Taylor. So if you think of that business, then type it in the chat window. Now remember, no one got it right last week.
Nope.
No one got it right the week before. But to be fair, we didn't do it on the week before because it was half term. But the week before that, so no one's got it from that. It is a difficult clue, that one.
It is, yeah.
Clue number 2. 332 shops across the United Kingdom. Lucy has chipped in with what she believes to be the correct answer. Waitrose and Partners. Let's have a look. I'm surprised people got it so early. If it is at all correct, has an upmarket reputation and customer base. So we're looking for a business that sounds similar to Waitrose and Taylor and has an upmarket reputation and customer base.
Do you shop at this shop, Graham?
No. There isn't one near where I live in Sunderland. There's not many. There's not many. Well, I'm assuming it's Waitrose. I don't know. Shall I have clue number 5? Customers given green tokens to choose store channel. I'm sure those clues are the wrong way around. And the answer.
I think the
answer is Waitrose and Partners. So well done. Johnny, Autumn, Aaron, and Lucy and Lucy was first in there with.
I think specifically Aaron was first in, wasn't he? With the full name there, Waitrose and Partners, because of course they changed their business name 2 or 3 years ago from Waitrose.
Yeah.
But well done.
Well done,
everyone. We've been beaten. What can we say? That's the end of the session.
Thanks for joining us. Should we have some MCQs?
I don't think these are easy. These are not easy. Shall I do the first one?
Yes, you can do.
Okay, so here's our first one. Go for it, Graham. We've got 4 of these, haven't we? By the way, this session lasts about half an hour. For those of you watching live thinking, when's this going to end? About half an hour.
Yeah. A business decides to use debt factoring and sells all of its receivables to a debt factoring firm at a 10% discount to the value of amounts owed by customers. The immediate impact of this on the profits and cash flows of the business is. So select whether you think it's A, B, C, or D. So A, lower profit and lower cash flow. B, lower profit and higher cash flow. C, higher profit and lower cash flow. D, higher profit and higher cash flow. I think it's definitely got something to do with profit and cash flow.
Yeah.
So what do we think? Selling all of its receivables to a debt factoring firm at a 10% discount to the value of amounts owed by customers. The immediate impact is this on profits and cash flow is. So what do we think? So answers starting to come in. Receivables, that's, be careful with that. A lot of students get receivables and payables mixed up. So it is really important to be on top of your key term. And debt factoring was examined. It's been examined a few times and has caused a few problems.
Good question.
With
that
students.
But we've not beaten the live stream audience just looking at the many answers coming in. We've not beaten them, have we?
No. What do we think then? Yeah, I think most gone for B. Should we reveal the answer? So, yes, it will result in lower profit because obviously we're given a 10% discount. But cash flow, we're getting our cash flow in because previously the money wasn't there and we've sold our debt to a debt factoring firm at a 10% discount. So cash flow will be higher, but profit will be lower. Make sure you fully understand debt factoring. It is quite a commonly examined concept and one which students have traditionally found challenging. Let's move on to the next one.
Okay, so a supermarket business, a bit like Waitrose in a way, decides to do 2 things. Cut selling prices on all popular products to boost quantity sold and significantly reduce the number of managers employed at head office. So the result of these changes on the profitability ratios of the business is likely to be what? And it's one of these again, isn't it? A combination of low and high. Is it lower gross margin and lower operating margin? Or is it one of the 3 other options? So what is the impact, the combination of those changes likely to be on the profitability ratios? So we'll give you 15 seconds or so. Though having said that, Autumn and Isabel are straight into the live chat window with their response, which suggests that they are confident in the answer and also that they don't waste time on multiple choice questions in the exam, which is good. Aaron's also gone for the same as Isabel. Autumn. We've got lots of people joining us live here, so this is going to be a busy live stream chat window tonight. Most people, I would say, not everyone, most people going for B. Let's have a look at the answer. It is indeed B. Yeah, it is, isn't it? Because the gross margin, the margin or percentage margin made on each sale, well, that's going to be lower because we've cut our selling prices. We weren't told that they had cut the cost of goods sold per unit. So that's going to be lower margin, but it should definitely result in higher gross profit in total because we're trying to boost the quantity sold. But even allowing for that as well, we're going to reduce our operating expenses because of the managers employed at head office. Those are operating expenses, that should boost operating profit and operating margin. So yeah, the answer is B. Right, one more for you, G.
Okay, so it's a calculation style question. Well, not a style question, it is a calculation question. So the table shows data from the accounts of a company. All you need to do from that is work out the operating profit. So is it 13 million? Is it 7 million? Is it 5 million? Is it 10 million? Read the table carefully. So the table shows data from a company's accounts. The company's operating profit, is it 13 million? Is it 7 million? Is it 5 million or is it 10 million? So we're after the operating profit. What do we think? It may be useful if you do have a calculating implement. So Isabel straight in there with
This is good.
B. Sarah Stargirl Jones with B again. It can't be another. Can it be another B, Jim? That would be
Not
the third
often.
B.
It's very rare that it's B again, so I would have thought it probably isn't.
So Autumn's gone for B. Yeah, there's a lot of us live. Not as many answers in the chat window, which means maybe one or two are finding that slightly challenging. Maybe it's the way it's presented, because you would associate, and you've got to be careful about things like this and read the data carefully, because we can see sales revenue is the bottom item. Normally, if you taught it or you look at textbooks, you would associate sales revenue being at the top. That's not always the case in an exam, so you need to read all the items really carefully. Shall we reveal the answer? And it is 7 million, so it is B. Well done. So we've got a sales revenue of 29 million. We would knock off the cost of sales. That would give us our gross profit. And then we would take the other expenses off, and that would give us our operating profit. We don't include taxation. So it is indeed 7 million. So just watch out for things like that in terms of, read the data very, very carefully. Well done, everyone, for having a go at that one. Shall we do another one, Jim?
Now, I think this is hard. But it is based
hard.
around a previous exam MCQ in paper 1 from, I think, 2 sittings ago. So certainly possible to get something like this. You've got 2 statements here, but in each statement, rather than a sort of a phrase or a sentence, we've got a formula. And we need to decide whether each of those formulae is true or false. So the first one there, selling price times quantity less fixed costs. Does that equal profit plus variable costs? Statement 2, total revenue less profits. Does that equal variable cost plus fixed costs? You might want to maybe quickly write down a little example for yourself. And that's quite an effective way to test, if you like, whether those 2 statements are true or false, or both false, or one or other is true or false. So we'll give you a little bit more time on this one, because I found this when I was working through some past papers, I found this quite a hard question. It took me a couple of minutes actually to realize the best way to do it is to quickly give yourself some numbers, and then it becomes obvious what the answer is. So Aaron's first in with his answer. So well done for being first in. I won't tell you whether you got that right or not yet, Aaron, but well done for having a go. Closely followed by Autumn and some new participants in the live chat. We have, as Graham says, we've got lots of people live tonight. Not everyone so far has been felt able to type their answer in, but feel free to have a go. There's no marks to be lost. Lots of people, I would say, most people going for C. Shall we have a look? Well, I think the answer is true. I think they're both true. I'm now thinking that maybe I'm not right, but I think I am, because I had to go at work. Should we have a look through my answers here, G, just to see whether I've got this right or not? So statement 1, well, selling price times quantity, that's sales revenue, isn't it? So sales revenue less fixed costs equals profit plus variable costs. Well, I just did a little example for both, the same example. And yet, sales revenue of 500 less fixed cost of 100 does indeed equal profit plus variable costs 400. So that's true. Statement 1 was true. And similarly, statement 2 is also true. Revenue less profit, 350 equals variable cost plus fixed costs. So actually, that little table helped me work out that both of those two were true. I guess the key point there, Graham, is just the ability to be able to manipulate the formulae. For example, if you're calculating inventory turnover, you might be given sales revenue and gross profit. So you'd need to know that the difference was cost of sales. So confidence with manipulating the formula is one way the examiner tests understanding of these concepts.
Definitely, and I also think when it comes to your paper one, you'll have 15 MCQs, and the general rule is a minute a mark, so 15 minutes on the MCQs. That said, there's no harm in spending 2 or 3 minutes on that one, using some figures, because some of the MCQs you will no doubt be able to do within 3 or 4 seconds. So that 15 minutes, that minute mark, is spread out over all the MCQs. Some will take longer than a minute, some far less. So I think the secret to that one was using the numbers to just double check your workings there.
Yeah,
tough question, but again, want to go back with on the replay as well to make sure you were fully aware of of the numbers.
Good stuff. Right, I think we've got a couple of calculators coming up, haven't we? So calculators at the ready. And do you want to do this first one, Graham, which looks like it's on budgeting? Big part of 3.5, isn't it?
Yeah. And budgeting, again, is an area, budgeting and variance analysis is an area that is frequently examined as an area that students sometimes struggle with. So you've got some actual and budgeted financial data for a business this year. You can see the item, you can see the actual and the budget. All you need to do is calculate the profit variance, but something else, you must state whether it is favorable or adverse. If you're asked to do that and you fail to do it, you're going to drop a mark. So you've got 60 seconds or a minute. I'm not sure what music Jim's chosen. I'm hoping it's the Disney music. I'm hoping it's the Disney music.
I've gone Disney as well, because that seemed to help our live stream students do even better last week. So yeah. Should we start the music?
Let's start the music. The music. Wow,
lots of answers coming in. Shall I stick some on the screen here? Johnny, I think.
Yeah, and I think Johnny was in before the Disney music started. So obviously you'd started working out during our small talk. For those who've not had a go at it yet, how would you approach a question like that? Well, the first thing to do is to know that a variance is the difference between the actual and budget. So you would work out the actual profit, which is the sales revenue minus the total costs, or the 290,000 minus the 155,000. That's our actual profit. Work out the budgeted profit, which is the 310,000 minus 182,000. You've got your budget profit, actual minus budget, will give you your variance, and then decide whether it is better than expected or worse than expected. It's better than expected, so it's favorable. Now, what we've shown you on screen is, and we keep saying this every week, and we'll continue to say it every week while there's calculations there, is show your process, show your workings. That way, even if you get the final answer wrong, you may get some marks. Well, a lot of students say, well, how is that possible? Well, if you've worked out the actual profit correctly, and you've worked out the budget profit correctly, but horror of horrors, you've accidentally, in your calculator, on the final step, typed in 135,000 minus 127,000, your final answer will be wrong, but the examiner will recognize that the other stages in your process are correct, and you will be awarded some marks. If you just wrote the wrong answer down, you will get 0 marks. So remember, 7,000, show the pound sign. It is possible you could lose marks for not showing that. It asked for favorable or adverse. If it asks for it, you need to put it so that is a full mark answer. Of course, if you wrote £7,000 favourable with no working out, it's the correct answer. You'll get the full marks. But we would always recommend showing your workings out. Well done, everyone.
Yeah, good answers there.
for having a
Superb
go
stuff.
at good answers. Well done.
That'll be 3 or 4 marks therefore in the bag. Let's therefore have a go at a slightly different question. Another calculation, but we're moving on now to break-even analysis. So whilst I do the bit of small talk and introduce it, Johnny is going to be rapidly calculating it and getting his answer on screen before we start the clock. So a business sells 25,000 units per month and at an average selling price of £12 each. The variable cost per unit is £4. The monthly fixed costs are £160,000 per month. But the question is, what's the margin of safety for the business? If you remember what the margin of safety is, you're going to be in good shape. A couple of stages, 2 or 3 stages in that calculation. Let's start the music. And the clock has finished ticking, and well, lots of answers coming in. I'll stick a few of them, some of the first ones that came into the live chat there, and most people are saying the same thing. Although actually nobody's writing units down, Graham. I don't know whether you've got a thought on that, but well done for getting the right quantity. It is indeed 5,000 units. I think it's quite important to write units, Graham, isn't it? Because it is the margin of safety is expressed in units.
It was flagged in the examiner's reports that students aren't writing down units, not putting percentages where percentage is required, and not putting pound signs where required, and marks will not be sometimes awarded for that. And it's such a shame if you've done all that work and you lose a mark for something as simple as not writing units down, because in effect it's like an MCQ question, isn't it? It's a mark there. So again, make sure you use the correct terminology, units, and things like that.
Just to explain, if you're looking at that thinking, I don't quite understand how we got to that. Don't forget, margin of safety is the difference between the actual output, well, we were told that 25,000 units per month, and the break-even output. And normally, if the margin of safety is positive, well, not normally, if the margin of safety is positive, that means you're selling or making more than you need to break even. Don't forget the golden formula: profit is margin of safety times by contribution per unit. And in this case, the break-even output there is 20,000 units. That's 160,000 fixed cost divided by contribution per unit of 8. Right, I think we'll move on, Graham, to the third activity now, which I think is a definition spinner, isn't it? So we're moving away from calculations to picking out some of the key terms, concepts, knowledge gatekeeper concepts, if you like, from 3.5. Should we have a look at tonight's board?
Let's have a look at it.
This is this definition spinner is live into AQA, logging into their database of key terms, and it randomly selects 6 each time. So we have no control over this, Graham, do we? None at all.
No, I get really excited because I've got no idea what it's going to land on, and it's like I say, I keep saying it. It's much as a surprise for me as it is for those taking part, and I can hardly contain myself. What will it land on? I'm hoping it's venture capital and payables, because they're my 2 favourites out of what's on screen. But who knows? I wouldn't dare hazard a guess.
So over to you in live chat. We'll set the spinner going once we find out what it is. In the live chat, please, a quick definition of what it is it's landed on. Yeah, right. Graham does look very excited. That is his excited look. Anyway, we're spinning the wheel, and I'll try to put 2 or 3 examples of your responses on the screen. Oh, it stopped at capital structure, just when I thought it was going to be operating margin. As I say, we have no control over this. So over to you, team business. What do you understand by capital structure? If somebody asks you to explain it in, I don't know, 10, 15 seconds, what it is. what would you write down?
Well, I think it's also important to mention once again that 2-mark definition questions have started to appear
They have.
regularly now in paper two. So in this year's paper two, there's a definition on shareholder dividends. You'd be surprised at how many students couldn't answer that. So you really need to be on top of all your key terms. So what do we think? What is meant by capital structure?
That's quite a hard one, isn't it, to start with? I think that's
It is hard, and students will revisit capital structure again later on in the course when they do gearing, won't they? Of course, depending, you may have covered gearing depending where you are. You know, if you're a year 12 student or year 13 student, of course. So any definitions of capital structure, I would try and avoid using things like, well, it is the structure of capital within a business. An examiner wouldn't be fooled by by something like that.
yeah.
What do we think? I think that's proving a difficult one, isn't it, Jim?
Yeah, fair dues. I mean, I'll keep a lookout in the live chat for some more contributions, but it's that has beaten the live chat audience tonight. Let's have a look. What do you think? Let's have a look at our definition. The mix. Oh, hang on. Wait a minute.
Oh, wow.
Just before I
Well
displayed
done.
that, Johnny was in there. I think it's because he was writing a lot. Let's stick it on the screen there. Great answer. It's the makeup of the business's finance, either equity and or could be a mixture of both, couldn't it? Debt. Superb stuff, Johnny. And Autumn, very quickly in the live chat as well there. The balance of finance. I like that
Nice.
phrase, the balance of
That's
finance.
nice.
That is nice in terms of equity.
It is
and
nice.
debt. Very good.
That is really good, Autumn, because what you'll find is as you progress, when you look at things like gearing, that the balance can be uneven in terms of equity and debt, and that has lots of implications. I can see us using that word balance when we look at capital structure in the workshops.
Yeah.
Very good there.
Superb stuff. Yeah, it's the mix, isn't it? Businesses are financed by a mix. Sometimes it's all equity. So, for example, shares and retained profits. Sometimes it's mainly debt. Sometimes it's a mix. Good stuff. Right. Well, that is very encouraging. 3 fantastic contributions and a few more in the live chat. We got those on the screen. Now, capital structure should disappear because the AQA database would have been updated and therefore it should be replaced by something. And, bank loan. Well, that's a bit easier. So let's spin the wheel. You do this one, G.
Oh, nearly. It was nearly venture capital.
Yeah,
nearly.
But it wasn't.
Just one of my favourites. It wasn't. So retained profits. So can we have a definition of retained profit? Trying to avoid profits that are retained by a business. Trying to avoid that. That is no understanding whatsoever. So what do we mean by retained profits? What do we mean? Might need a few seconds to type your answer into the chat window. No doubt we'll drag these onto the screen.
It's actually a really important concept, isn't it?
Yeah, it is.
Got some great answers coming through. Let's pick out a couple as they're coming in. Lucy typed oops, so I think Lucy's coming back with it. But the real KC has come up with a great answer there. This idea of reinvesting, isn't it, rather than sending out to the owners. Oh, what a great answer from Isabel. Look at this one here.
Yeah, that is very good. Instead of giving dividends to shareholders and reinvesting it into the business, so it's kept back, isn't it? Maybe for a rainy day.
What an answer that is! I'm embarrassed to see ours. Actually, to be honest with you, now I'll stick ours on screen. I say ours, mine. Let's leave Isabel's answer on the screen now because that is just sensational, isn't it? What do you think, G? Any other comments on retained profits?
I can't beat the chat window. It would be foolish of me to try.
This idea of reinvestment is really important, isn't it?
Yeah, kept back within the business, and as a method of finance, obviously, it doesn't. Obviously businesses don't pay interest on that. So, in times of rising interest rates, it's the businesses with most retained profits, may do better. Great answers there.
Yeah, that's why I've decided to retain all this year's profits in the business, Graham, rather than paying it out as a bonus to staff.
Oh no! I can have Christmas Day off though, can't I, Jim? I can have Christmas Day off though.
Certainly can. So retained profits should disappear. We've got one more. This is a quick fire one, and it's been replaced by adverse variances. Well, it could be one of the 6. Spin the wheel. As I say, it's as much fun for us as it is for you. We've no idea where it's going to finish. I thought it's going to be operating margin.
Oh,
It's crowdfunding. So last one.
crowdfunding.
Who's going to be first? Isabel and Johnny and Aaron were pretty quick last time. Who's going to be first in with a definition of crowdfunding? What do we mean by crowdfunding? But super impressed by all the contributions so far tonight. This is demonstrating very precise knowledge. There won't be many definition questions, 2 markers that get past you lot.
No.
In fact,
and it's that word, isn't it? It's precise, you know, precise, and it's not the fluffy. I know I say it sort of blasé, things like profit retained by the business. You'll be amazed at how many answers you do see like that. So it's very important you have a real good understanding of every key term on your specification. Oh, I like that answer. Online platforms. So there's a bit of application in there. It's the online platforms from Aaron there to generate business funding from the public. It's great. There's lots of really good examples, isn't there, of businesses who've used crowdfunding to asking people to
phenomenal answers coming in here.
Yeah, that is really good. And often it's in return for something, isn't it? I know. Brewdog, there's a controversial business, isn't it? But Brewdog use crowdfunding a lot, don't they? And they give their investors things like, I don't know, you can on your birthday you can get a free drink as part of buying of investing in that business. So some great answers in there.
Occasionally crowdfunding is in return for an equity stake. You do have there are some crowdfunding platforms where that is the purpose, to build a shareholder base and people invest in the first or subsequent issues of shares. But often it's in return, as you say, for maybe first use of a product or a significant discount or some other incentive or benefit. And Brewdog being a great example of that. Superb. Oh, well, I'm really impressed by our precision of our subject knowledge on 3.5. So well done. Apologies to anyone who's typed something into the live chat and I've not put it on screen. We do appreciate people having a go, but you've got one more opportunity to have a go with our last activity for tonight, which is Give Me Two. And we've got an application theme tonight, haven't we, Graham, with a couple of businesses. So we're not just looking for knowledge, but we're looking for application. So over to you, mate.
Yeah, so management at Greggs, and Greggs are a business on a roll. Very close to my heart, Greggs, being from the northeast. So management at Greggs are concerned about some stores which are loss-making. Give me 2 ways in which Greggs could lower the break-even sales level for a loss-making store. So that's taking knowledge and applying it to Greggs, the bakery Greggs. So can we have 2 ways in which Greggs could lower the break-even level for a loss-making store? Jim, start the music, please.
30 seconds. I think we're looking for some application here as well, aren't we?
Yeah, we want some application here. A bit of such as seasoning if possible.
Are you playing the bongos there, G? Can't tell.
Yeah, just out of sight there. Just out of sight. Okay, did I tell you, Jim, I got hit on the head by a set of bongos last week? Yeah, the doctor said I've got percussion. So can we have 2 ways in which Greggs could lower the break-even sales level for a loss-making store? So we've got changing location, perhaps, to lower fixed costs. Yeah, lower fixed cost stores, increasing selling prices. We've got decreasing, finding alternative stores. There's a little bit of application in there.
Yeah, a bit more.
Increasing selling prices. So just picking on that, and there was a previous answer referred to selling prices. It would be good to know the selling prices of what type of products Greggs sell are really rooted in the business there. We've got trying to get lower bills, decrease costs. So ingredients is is a little bit of application in there. We've got Johnny's answer, which I can see Jim's not pulled it up yet, but you're talking about Greggs being quite labor intensive. It is a labor intensive, quite labor intensive, since they're a customer facing business. Should we have a look at what we got and see if we can tease out the application, because application is an area that, again, it's been picked up that students are struggling. So we've got lower store rents with the shop landlord. So we got the word shops there, store rents. So I know a lot of students mentioned about the shops. That's a really good one. We got source lower prices for ingredients such as flour and butter. So again, that roots it in the business. We've got energy prices for the ovens. When there was a few people mentioned about increasing prices, all you would need to do there to make them more applied is use what we call such as seasoning. So increase prices, such as the price of Greggs are known for their sausage rolls. Increase the price of their sausage rolls or their scones or their donuts. So such as seasoning is a way to take your knowledge and give it a little sprinkle of application. So some good answers there and a little bit of application, which was really good to see.
Have you got one more of these? We've got one more to finish off with. So
okay, so we've got management at Waitrose. Oh, and do you know what? It ties it in nicely, doesn't it? So we started off with Waitrose, and we're going to end on Waitrose. So management at Waitrose want to improve its cash flow. Give me 2 ways in which it could do this. So again, try and use your knowledge and apply it to Waitrose and partners. 2 ways in which you can improve its cash flow. Jim, start the music, please. So Foxfire now, good. You know what? That just show really the difference between payables and receivables, doesn't it? Which often students do get mixed up. You know, he could have brought in maybe debt factoring there, but I'm
not sure how much receivables Waitrose would have, though, would it? Because when most people are paying cash or
pay by cash. Yeah, pay by cash. Pay food suppliers.
Application there.
Bit of application.
Later.
So
you probably pay them later, wouldn't you, to increase?
Yeah. You'd want to delay that. Yeah.
What's Aaron gone with? Aaron's gone with a security law and order option.
Well, you know, it's a fair point, isn't it? You know, it's a increased crime prevention. We've got a bit of application in there. Money lost due to theft.
Yeah. Great answers, Kimmy, and well done, everyone.
Shall we see what we had?
Yeah. Let's call it up here. Let's see what we went with.
So longer payment periods with its key suppliers of products, again, such as, so there's that such as seasoning again, such as ready meals. So Waitrose buys ready meals off someone, their suppliers. So that's a bit of application in there. So negotiating longer payment periods, so delaying those payments would improve cash flow. Reduce the profits paid out to Waitrose partners through the annual bonus. Now that's an interesting one, isn't it? That would improve cash flow. Obviously less cash leaving the business. With things like, with questions such as this, it may be, depending on the question, where you have to give a balanced response. So maybe you would look at, well, actually delaying longer or negotiating longer payment periods might affect supplier relationships.
Yeah.
So there's always a balance. A balance there, and it was interesting because John Lewis announced that they weren't paying their staff the bonus, weren't they? And that was in the news, and I remember putting that on Instagram, and there was some students who were working at John Lewis who weren't that happy about that.
No,
so there's a bit of stakeholder there was a bit of stakeholder conflict there.
Yeah.
So it's important to look at 2 sides depending on the question. But that reducing the bonus there is rooted in Waitrose and the products such as ready meals.
And hummus.
Really good application.
I could have said such as ready meals and hummus, couldn't it? Because that's basically what people buy at Waitrose, I'm told.
From Waitrose.
Yeah.
Yeah. Hummus, yeah. Hummus is, of course, I mean, you know, maybe everyone does. It's just chickpeas, isn't it? That's all it is. So there you go.
On that note.
No, on that note.
We're done. Well, we're bang on time again, and the only reason we've got a minute or two over really is because of the fantastic responses that we had in the live chat. So we do appreciate. We've had lots of people in live with us tonight. Do appreciate people taking the time to type their answers in, both to the MCQs, but also to those definition questions and the give me two questions and the calculations. So well done for everyone for having a go. We appreciate that. If you're watching us live and you've enjoyed the session, give the session a thumbs up. If you're watching on YouTube, that is. And because I think we're live to several platforms tonight. And then if you found it useful and you'd want to suggest further content, but also suggest or got any questions about what we've covered tonight, just add it into the comments on YouTube. There'll be a replay of this session. Literally the second we press finish, it will appear as a replay on YouTube. Graham, many thanks for joining me and for helping me put the sessions together. Next week must be 3.6.
Must be 3 points. I think so, if it follows a pattern. And it wouldn't be any live stream unless I mentioned, what is it? It's Instagram, isn't it, Jim? It's Instagram. And please, if you want extra help and support, our Instagram account is flying at the moment. There's lots going on there, lots of videos, lots of revision questions, business in the news, to your business. So if you're on the gram and you want extra help and support on a daily basis, then please follow us and interact and ask us questions on there as well. But I think on behalf of Jim and I, thank you so much for getting involved. And we are a mock tomorrow. Fantastic.
Good luck, Isabel.
Good luck, Isabel. Good luck. And, with the quality of those answers, I don't think you'll have any problems at all. So on behalf of Jim and I, thanks for joining us, and we'll see you at 4:30 next Tuesday.
Cheers, everyone.
See you now.